heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Coming up, we sit down with the CEOs of AMD, T-Mobile, and Pinterest as tech earnings hit full send. Wow, plus Microsoft Azure growth tests investors' patience as AI spend ramps, and the US sparing ASML and Tokyo Electron from chip curves. We bring you the details. What a morning I woke up to this morning. This is what the earnings that have gone before last night look like in terms of the share reaction. Many different stories, a lot of it centered around AI. Microsoft down 1.3%. Off session lows, the story, slower than expected Azure growth, an 8% contribution from artificial intelligence. But investors look at the CapEx and go, we don't see the growth or the money coming out the other side of that equation. AMD, a different story. They actually boosted modestly the guidance for the outlook for the MI300 AI accelerator family sales for this year. And as you guys know, we're going to be speaking to Lisa Su really soon. So many important questions. Lastly, Intel up more than 1%. Bloomberg is reporting, citing sources, that they are going to cut thousands of jobs to respond to the lagging earnings and get focused back on getting that foundry or fab business off the ground. Here's another one that I'm really interested in. T-Mobile really coming in strong. The stock has kind of bounced around this morning on T-Mobile, but is now up around 3 to 4%. And the story's so interesting. It's those monthly subscribers that are coming in well. I looked at the industry, and I think the industry as a whole has done really well on that front. Delighted to bring in the president and CEO of T-Mobile, Mike Sievert, who joins me on set in New York City. Good morning.
It's great to be here. Thanks for having me.
Really interesting, that number, the subscriber number, because I look at your peers and competition who also seem to be doing well. So it raises the question, where are your gains coming from? From them, or is there just like this new generation of customer that's appeared?
Well, we're seeing nice organic growth in the industry, so everybody did pretty well. Both of my principal competitors, I think, had net gains that were a little better than expected, but T-Mobile took the prize. I mean, this was the biggest Q2 for postpaid net phone additions ever in our history, and we took more than...
took the prize from who, Mike? That's what I'm trying to...
Well, we took more than AT&T and Verizon combined. So this is still a share-taking story for us. And, you know, of course the industry's growing. That's healthy, that's positive. But T-Mobile's the disproportionate winner in the growth game. Our postpaid service revenues up 7% year over year, more than twice the pace of the principal competitors.
Mike, back in California, we're a T-Mobile household, and I use Verizon for my kind of work business line. But it's the technology story that I'm most interested in. You know, I think back to when the iPhone 15 Pro generation came out. I went there because of incentive, a credit back on a new handset. The incentive of having multiple lines on one account. And I always want to know how much of a factor that still is for you guys to kind of think, well, what can we do on the incentive side to either renew existing customers or bring in new ones?
Well, customers have always trusted T-Mobile to be the best value in the industry. That's our legacy. That's our heritage. And what's interesting is now that we're the best network in the industry also, some would expect us to give up that value position, but we're not gonna. You know, we have the best promotions, we have the best overall value, we give you more, we ask less of you, and we have the balance sheet and the cost structure to defend that value position for the long haul.
It's great to have you on Bloomberg Technology here in New York, and one of the technology stories with T-Mobile is fiber, KKR, Lumos. I think you've talked about the importance of that and the ramp, but I wondered if you just give me some specifics, why, and also how you grow your investment and why you did it.
Last week, we announced our second transaction in the space. The first one was Lumos a couple months ago. Last week, we announced that we are collaborating with KKR to purchase Metronet. And Metronet is the fastest growing pure play fiber company in America, and arguably the most important. And so it's really terrific to be collaborating with KKR. Our joint business plan for this asset and this team is to grow it past 6.5 million homes passed within the planning period now till 2030, and to do so without further capital calls.
Is the long-term opportunity for you bundling? So you look at your subscriber customers, you look at what the household does with you, you want them to do more? Is that the idea?
Well, it's the current opportunity. Remember, T-Mobile's a major broadband provider today. In fact, we have 5.6 million broadband customers through our fixed wireless product. This quarter, Q2, T-Mobile took our highest percentage share of broadband net adds ever in our history, 75%. When you add up all fiber, all cable, and all fixed wireless, one brand, T-Mobile, took 75% with over 400,000 net additions. And so our value proposition is resonating with people, and part of it is, sure, they trust our brand and they want to buy wireless from us and broadband from us.
Stock's now up 4% in the session, up about 14% year to date. This is Bloomberg Technology. One of the companies that I cover is SpaceX. I'm really interested in the Starlink relationship, but when I flew here on a United Airlines flight, I was able to access Wi-Fi in flight because I'm a T-Mobile customer. You've got different options there. What's the big picture strategy?
Well, first of all, I'm glad you acknowledged that benefit. This is so exciting. We have partnerships with most of the...
Because United doesn't have Starlink, is my point at this moment.
Correct, and we have partnerships with most of the major U.S. airlines such that T-Mobile customers get free Wi-Fi on flights, and it's so great, and we're doing that through satellite connectivity with a number of partners. But what you're asking about is our exclusive arrangement with SpaceX. We have a technology alliance, and we intend to be the first ones to bring satellite connectivity to your day-to-day usage of your mobile phone. And the vision here that's joint between us is to eliminate dead zones. The idea that if you can see the sky, you're connected, and you can message, text, and eventually make phone calls and have some data to be connected to the people and the issues that you care about.
An interesting technology conversation, and you acknowledge the competition and growth across your industry as well. Mike Sievert, T-Mobile CEO, and of course, president of T-Mobile as well. Now, I told you this was a day where you need to buckle up. We have a lot of earnings coming thick and fast. AMD shares currently up 6%. At one point in the session, we're up 11%, putting them on track for their biggest jump since February. That following positive earnings results, showcasing a boost in sales from the company's AI accelerator, the family of MI300, but also some interesting recovery in the PC business. Joining us now is AMD CEO Lisa Su. Good morning to you, Lisa. You know, I think that's where everyone was looking, right? MI300, and whether or not you could go beyond the 4 billion. And you said 4.5 billion. I wondered if we could start by discussing the factors behind that. What changed, whether it was supply or demand in shipping more of the MI300 family?
Well, good morning, Ed. It's great to be here with you today. Look, we had a very strong second quarter. We're very pleased with the overall growth that we saw, really led by the data center business. So our data center business more than doubled year on year in the second quarter, and we see a strong second half there as well as strength in PCs. So to your question about MI300 and what are we seeing in AI. We're seeing an environment where everybody needs more data center AI infrastructure. Computing is really the foundation of what drives, sort of all of these AI capabilities going forward. MI300 has been well into the qualifications at numerous of our top customers. And, what we saw over the past quarters, we passed some very significant milestones in both ramping up our supply chain, but also passing important data center customer milestones where customers have moved our product into production. So it's an exciting time right now. We did update our full year AI guidance from greater than 4 billion a quarter ago to greater than 4.5 billion. I think we're seeing great traction in our hardware and software milestones. So overall, I'm feeling really good about the setup going into the second half of the year.
Lisa, I'm really interested in kind of the design and performance differences for all the AI accelerators that are out there. You and I have talked about the technology differences, but on the call, you gave the example of Microsoft and its use in the quarter of the MI300 generation. When you're speaking to a hyperscaler, when might they opt for using MI300 over NVIDIA's H100 and I suppose to a lesser extent Gaudi? What is the specification or performance driver that would make it a better solution in a certain use case?
Yeah, well, first of all, I'd like to, say that Microsoft is a phenomenal partner. They're a great partner for us, across, the data center as well as, the client businesses. And when you see, in particular, how complex these AI systems are, you want to have, the best technology capability. I can go into speeds and feeds, but I won't. I think it's suffice it to say, you need this type of computing for both training and inference. In our case, MI300 is the leading inference accelerator today. We have the highest memory, bandwidth, and that's really helpful. When you're asking questions to, something like, a ChatGPT or Llama model, and you want your answers to return faster, you want the fastest inference accelerator out there. And, MI300 does very, very well in that framework. And then when you take a step back and just look at the overall AI market, I mean, the overall AI market is growing so fast. There is no one solution fits all. Actually, you do have different workloads will be optimized with different hardware. So I think we have a tremendous opportunity. I think we're very excited about the overall market growth. And then as more customers get a chance to use our AMD Instinct roadmap, I think we're getting very positive feedback.
Lisa, you addressed head on the call, I think, that the investment cycle for AI has legs. It will continue. But just interested in what you just said, can you kind of apportion of how much of that spend or investment is going to training versus inference at this stage?
Yeah, absolutely. So when we look at this cycle, Ed, you and I have talked about this before. I mean, we're forecasting that the overall market for AI accelerators, when you look out and let's call it 27, 28 and beyond timeframe, will be $400 billion plus, which is a huge market overall. I think in that you're going to need a lot of training and you're going to need a lot of inference. Today I would say that most people would say that you're building foundation with training. So training is a place where you want the largest models to really be capable of using all of the large data infrastructure. But going forward, you would expect that inference demand will actually surpass training. Most people believe that, and I think this isn't this. We'll see how this plays out over the next couple of years. But you're going to need technology for both training and inference. And at the end of the day, you're also going to have a very diverse set of models and a very diverse set of needs. So you have the largest foundational models out there, but then you also have many enterprises are training on their own data, and they'll use sort of a different type of infrastructure for that.
Lisa, what's actually being done to address the supply constraints, such as they are, that impact your abilities with MI300?
Well, I would say overall, when you look at the semiconductor supply chain, it's been amazing. I mean, we have substantially increased the overall capacity as an industry to address this very high AI demand. We've also addressed, from an AMD standpoint, our supply chain has been expanding every quarter. We announced in the second quarter that we did over $1 billion of revenue in AI accelerators, which is a fantastic number. We see that increasing every quarter as we go into the second half of the year. The supply chain will continue to be tight as we go into 2025, and that just says a bit about just how much demand there is out there. We have great partnerships with our supply chain partners, and we're working on expanding that as fast as possible.
Lisa, the dominant player in the market for AI accelerators that go into data centers is committed to this cadence of essentially a new generation of chip annually. What does AMD do to compete with that and develop new products going forward?
Well, Ed, what we see in the market, spending time with, the industry leaders, is this market is moving so fast that you have to be on an annual cadence. So we announced last month that we have accelerated and expanded our roadmap. You'll see us later this year. We're going to launch our MI325 series, which is the next step in our roadmap. Next year, in 2025, we'll launch our MI350 series, which is a brand new architecture, and we're already well on our way to our MI400 series, which will launch in 2026. So we are on an annual cadence. Not only that, it's not just about the accelerator. CPUs continue to be very, very important. We see that overall. Networking continues to be very important. Overall system capability is also very important. And we are investing in bringing all of those capabilities together to really help our customers with the best infrastructure for their AI workloads.
Lisa, what I love about the Bloomberg Technology audience is there's going to be a big body of people out there who think AMD and they think PC and gaming. You know, that's kind of the reality of it. You painted this kind of positive picture for PC, at least for your company, in the second half of the year. Is that a story of a market recovery and broadly the market doing well, or is AMD doing something specific to outperform in that environment?
Yeah, we see a couple of things, Ed. First of all, the PC market is a good market. You know, the second half of the year is typically stronger than the first half, anyways, from a market standpoint. We see some positive signs in the market. I will say I'm very excited about AI PCs. I view AI PCs as an inflection point for what PCs can do in all of our daily lives, whether you're talking about a corporate environment or a consumer home environment. So that's a positive. I think we are also just launching a whole new generation of chips. You know, we call it our Zen 5 family, both notebooks and desktops. They are fantastic. We're really happy with the reception for those. And so we see that as an opportunity that is, you know, our product roadmap launching usually gives us a lift into the second half of the year. And then, you know, in the medium term, you know, going into 2025, you're going to see a lot more AI PCs. You're also going to see, you know, we believe an enterprise refresh cycle. So I think there are positive indicators for the PC market, you know, going forward.
Would you be able to give me some sort of forward-looking commentary on the gaming business in particular, when that might see some improvement?
Yeah, I mean, let me talk a little bit about gaming, Ed. You know, first of all, the gaming segment is a great segment. You know, we truly, you know, value the strong partnerships we have with the market leaders like Microsoft and Sony in the console cycle. Now, typically, these console cycles, you know, do have an ebb and a flow, and so we're in the second half of the console cycle. Let's call it the fifth year, and so we have seen a decline in revenue. I think that was very much as expected. We would expect that, you know, it would take until the next refresh cycle for you to see a substantial change in that. But this is very much a market that we know, we love, and we believe has you know, great you know, long-term alignment, you know, with our roadmap and our IP.
Lisa, I acknowledge you've kind of had a very busy 2024. You spent a lot of time on airplanes. I think about Computex in particular. While there, you were on stage with a number of partners, and we talked just now about the sort of legacy gaming and PC business. I just wondered if you have any sort of evidence or data you can give me that those partners are putting AMD into sales channels where you might not have any experience. For example, like in the public sector, or selling your technology to governments rather than just the hyperscalers.
Yeah, look, that's a great question. First of all, you know, we love our partnerships, Ed. I think partnerships are, you know, what makes this industry truly special, right? Every company has their secret sauce, their great product, but when you put it together and really bring the best of, you know, the industry together is when you get the, you know, the great payoff. When you look at our business, first of all, you know, let me talk a little bit about our, you know, enterprise server business. Super pleased to see the progress that we're making there. When you think about, you know, the server CPU market, let's call it, you know, outside of AI, there's a whole set of workloads that need the best, you know, general purpose computing. That's what we have with our, you know, fourth generation EPYC, and we just launched our fifth generation, you know, EPYC, or previewed our fifth generation EPYC as well. Very, very important, you know, foundation for, you know, these enterprise data centers. We made substantial progress here in the first half of the year. I would say 1/3 of our new design wins are actually from customers that have never used AMD before. So that's exactly what you said is, you know, as we introduce AMD more to the broader enterprise, you know, customers,
yes,
we're seeing great traction. Primarily because we have, you know, the best performance per dollar and the best performance per watt, you know, out there. So we do see a tremendous opportunity in the enterprise market, both on the traditional compute side, as well as AI PCs. So all of those are great opportunities.
Great. Lisa, I know you've got to go to your next meeting. So very quickly, what's the talent story for AMD in getting the best people?
We are very, very happy with the talent story. I mean, we have a tremendous you know, engineering team. They're doing great things on hardware and software. And we just announced our intent to acquire a fantastic AI company, Silo AI, that's based in Europe that is also, adds great talent to the company. So this is a war for talent, and I would say we're very happy with, the great engineering capabilities that we have to move the roadmap forward.
AMD CEO Lisa Su, it's great to have you here back on Bloomberg Technology. Thank you. Okay, let's get back quickly and check in on Microsoft. This is what shares look like. Top line growth of 29% for Azure, missed estimates of 31%. There was an 8% contribution from AI, but there's a concern about the spend they had to make to get there. We're also going to get a look at Meta results tonight after the market close in the United States. The stock kind of buoyant, and you think about the read-through. Let's see what happens. Coming up on the program, we're going to have more on earnings. We're going to discuss a story about Uber and BYD's new partnership, and a whole lot more. Take a break, take a breath. We'll be right back. This is Bloomberg Technology. Uber and China's BYD are teaming up to bring 100,000 electric vehicles to the ride-hailing app, starting off in Europe and Latin America before expanding elsewhere, not the United States. Joining us is Bloomberg Intelligence analyst Mandeep Singh. I find this fascinating. The idea in the first instance is EV availability to gig economy drivers on the platform. What did you make of it?
Yeah, I mean, look, Uber has so far done a great job of establishing a network outside the US, and obviously they don't have access to the China market. So these are the pockets where it has the #1 position. And, moving to the EV side makes a ton of sense. So clearly, Tesla isn't partnering with them. I mean, we know Tesla wants to go to robotaxis through their own app. They're not looking to use one of these ride-sharing guys. And I think it makes sense for Uber to collaborate with all these OEMs, whether it's BYD or Kia or anyone else.
Well, just real quick, collaborate, no financial terms between the two companies disclosed. I found the autonomous paragraph very important. BYD's future autonomous capabilities on the Uber platform. You know about my reporting on robotaxi with Tesla. That seems like a response, right? This is acknowledging the market state of affairs.
It is, but I mean, look, all these companies are behind Tesla and Waymo when it comes to developing the software capabilities for autonomous driving. So I would still say Uber doesn't have the platform to have, robotaxis, because all these companies just aren't there when it comes to the software development.
Mandeep, let's talk about Microsoft. I think we know the Microsoft story, right? Slower than hoped for growth on Azure cloud services in AI and CapEx. There was something Amy Hood said on the call that I just saw straight away that I don't see being discussed, which is a 15-year time horizon to monetize the CapEx. That's a bit of a clue of how long this is going to take to be real, right?
Yeah, and look, all these chips are changing. So with NVIDIA coming up with their latest architecture, they talked about shipping Blackwell. Imagine if you're a consumer of these AI services, you want access to the latest chips. And so that automatically drives a compression to your cloud workloads that are using the earlier version of the chip. So I think that's what we saw in the print. Like, there was some sort of substitution going on in terms of CPU to more GPUs, and also the pricing compression from the latest version of the chips.
I don't know who badged out of Bloomberg's world headquarters first last night, me or you, but we got another long day today, and I think Meta is probably the focus. What's the Bloomberg Intelligence expectation for this quarter?
I mean, you want to see top-line growth in excess of 20%. And remember, the comps get tougher in the second half. So this is the last quarter.
Because they had such a great year last year.
Exactly, in the second half.
Yes.
And so clearly, you want to see ad pricing continue to trend higher. Pinterest wasn't very convincing last night in terms of that ad pricing. And given Meta has the most GPU allocation, they're the biggest deployers of generative AI.
That's the thing, just real quick. We know they're buying that volume of H100s. We know the CapEx commitment. So what is it they're going to have to do to tell the market, this is a success for us in AI?
And they don't have a cloud revenue that's $5 billion run rate coming from AI. So it has to reflect in that ad pricing and ad revenue. And you want to see that momentum, the 20% plus growth rate.
Mandeep Singh, senior analyst at Bloomberg Intelligence. It's so awesome to be here next to you in New York City. Thank you. All right, coming up on the program, actually, Mandeep just mentioned it, Pinterest. Bill Reddy, who's the CEO of Pinterest, joins us exclusively on Bloomberg Technology to break down his company's earnings, which were released after the closing bell on Tuesday. Really looking forward to this one as well. Stay with us. We'll be right back. This week, me from New York City. This is Bloomberg Technology. Welcome back to Bloomberg Technology. Ed Ludlow in New York City. This is what the names reporting after market close are currently doing. Chip stocks are buoyant, partly because of AMD's earnings, partly because Nvidia is a top pick at Morgan Stanley, and that stock is going off like a rocket this morning. But there are some other stories. You just got the lowdown on Meta from Bloomberg's Mandeep Singh. Basically, how does all the investment in AI infrastructure translate to advertising pricing? Because at the end of the day, they don't have a cloud business. They're still a social media platform with a lot of other stuff going off. One mover to the downside in earnings is Pinterest. It's off by more than 13%. They gave this guidance on revenue or sales for the third quarter. Top end of the range, 900 million, but even the top end of the range was below street estimates. Now, what's always so interesting about Pinterest is the size of its user base. So many stories within it. Let's bring in CEO of Pinterest, Bill Ready, for more. And Bill, good morning to you. Thank you for joining us here on Bloomberg Technology. Let's start with that guidance, get it done. What were the factors behind the range, which, again, it's below street estimates?
Sure. Yeah. I mean, if you look at Q2, we put up record user growth. We hit a new all-time high on users. We came in above our guidance on revenue, 21% plus revenue growth, with 600 basis points of margin expansion. So Q2 was a really strong quarter. As we look ahead to Q3, we have a 5-point tougher comps. We're lapping much tougher comps. And you saw that from some of our larger peers as well. But when you step back from that, we're growing faster than our larger peers that have already reported. We're seeing our best product market fit in years. Gen Z is our largest, fastest growing audience, and we're winning share of wallet with some of the largest, most sophisticated advertisers out there. So the fundamentals of the business are all really sound, and we feel great about those. And as we guided forward, it's relatively consistent growth with where we've been once you adjust for currency fluctuations, despite the fact that we have a 5-point tougher comp. So I think you saw that in some of the reactions on our larger peers. I think you're seeing some of that here as well. But if you pull back from it, the fundamentals of the business have never been better for Pinterest.
Bill, something you told my colleagues at Bloomberg News is that historically Pinterest is a great place for window shopping, but I think the quote is that all the stores were closed. Help me understand that.
Yeah, so I came in 2 years ago, and at that time, Pinterest was primarily about browsing, and there weren't a lot of clicks and conversions to speak of for advertisers. We've made tremendous progress in making it so that users can actually take action on the things they find on Pinterest. And this has been right at the core of how we've accelerated user growth. Last time I was on the show last quarter, we talked about 7 consecutive quarters of accelerating user growth. We put up consistent performance to that on users again this quarter. And at the core of that is that actionability. And not only do users love that actionability, Pinterest is where Gen Z goes to shop, but it's great for advertisers. This is our third quarter in a row of more than doubling the number of clicks we sent to advertisers year on year, which is why you see us gaining share with the largest, most sophisticated retailers out there that are increasing share of wallet with Pinterest. And we're seeing that start to take hold across retail, which we cited as a place of broad strength for us and a driver of our really strong results in Q2,
Bill,
and that we're excited about as we look ahead.
Bill, just really quick, because you were talking about your user base, right? So we've just shown a graphic that shows the scale. 40% of that is Gen Z, and there's always a question about the actions that audience takes, right? Do they actually buy anything, having spent time on the platform?
Yeah, absolutely. I think this is, 2 things I'd say about Gen Z. One, they're the tastemakers for the next generation. So Pinterest is really unique in that it's not just that people shop on Pinterest, people curate their tastes on Pinterest. It's a completely unique behavior on Pinterest relative to the rest of social media, where people are planning outfits and planning what they're going to buy long before they do it. And so that gives us really rich signal to feed our AI for recommendations. And so that taste making that happens is not just good for Gen Z, but they're the taste makers for the next older generations where we deliver more relevant recommendations there. And then to your point on Gen Z buying, yes, Pinterest is where Gen Z goes to shop, and we see that same behavior that, Gen Z, yes, it spans teenagers, but it also spans all the way up through, recent college grads and people that are in their first jobs and their first apartments. And so we see a lot of
Okay.
shopping behavior there, and it's really consistent across demographics on the platform.
Bill, Pinterest does not sell political advertisements. Are you able to kind of quantify the impact of that policy in terms of a missed opportunity?
Yeah, it's a great question. We've done a number of things to invest in the positivity of the platform. That if you look at them on a short-term optimization, like political ads, you can say, okay, there'll be a lot of money spent on political ads over the coming quarter. However, we don't take that money because we see that that's an investment in the long-term health of our platform. As we're winning with Gen Z, one of the top reasons Gen Z cites as why they come to Pinterest is they see it as an oasis away from the toxicity they experience elsewhere on social media. So as we've done things like making Pinterest private only for under 16, we've actually seen that come through and drive user growth and engagement for us. And we're seeing it cut through with advertisers too, where advertisers also want to be in a brand safe environment. Brands are built on positivity, and brands don't want to show up next to negative, polarizing content. And so, yes, there'll be a lot of money spent on political ads, but we're consciously choosing not to take those because we think that's in the long-term interest of our platform for both users and advertisers.
Bill, let's talk about artificial intelligence, but I think some granularity is important. So which large language models or partners are you building on top of? And are you able to give a sense of like the specific AI spend that's related to kind of ad targeting and ad improvement, be it pricing or something else?
Yeah, this is, AI is a core competency for us. I've talked about on prior earnings calls where when you look at the fact that we're not only growing users at record levels, we're actually deepening engagement per user. A big part of that is on the increasing relevancy of our recommendations. And so I shared on a prior call that through large language models, we saw a 10 percentage point lift in the relevancy of our recommendations. That's really, really encouraging. It's why users are coming back. They're finding more of what they're looking for on Pinterest. But to your question on spend, we've also delivered really great margin expansion. This past quarter, even as we were investing in AI, we delivered 600 basis points of margin expansion. And you've seen that consistently over the last 2 years. And the reason for that is that we're delivering great user engagement from the AI, but it's user engagement that is highly monetizable. More than half the users on Pinterest are there to shop. So we're turning that AI investment into really great return through higher engagement, and then advertisers want to meet those users where they're shopping, and that's driving acceleration in ad spend for us. And so you've seen that in the results, but we're really finding that we can deliver great return on our AI investments, and we have really unique signal. I think this is one thing that is underappreciated across the industry, is that
Bill,
much like cloud computing, I think everyone's gonna have access to basic building blocks, but who has really unique signal, and the curation and shopping behavior on Pinterest gives us really unique signal to feed our AI.
Bill, the stock's down significantly in the session. It's down sort of 12% year to date, but big year last year. I think more than 50% gain in the stock. You're 2 years into this job. So what's the biggest action you've taken and one that you want to take?
Yeah, so it's a great question. And I think, certainly you don't like to see volatility, but we've seen volatility before. If you step back from it, we have consistently, over the last 2 years, demonstrated steady progress in improving the overall health of the business. On top line, on bottom line, on user growth and engagement, so the fundamentals are sound and improving, and we've delivered a say-do ratio of 1 on these things, and we'll look to continue to do that. The things that have been the biggest drivers in the business, I would say, 1, really investing in AI, and the actionability on the platform via that AI. So relevancy, actionability, and then positivity in terms of delivering a safe space for our users. Stated simply, our users go to Pinterest because it's a place they can invest in themselves without the sort of comparative, performative nature, that they experience on the rest of social media.
Okay.
And that's why they're there for that commercial intent. So we're going to continue to invest in those things. They're really working well for us. When you zoom out over the multi-quarter period, it's been a fundamental change in trajectory of the business, and we're going to keep investing in those things that are working because, again, our fundamentals have never been healthier than what they are right now.
Pinterest CEO Bill Ready, thank you for coming back on Bloomberg Technology.
Thank you.
Okay, the other big story, of course, is Microsoft and its cloud revenue slightly missing expectations. But my goodness, it's testing the patience of investors who are anxious to see that investment in AI pay off. That includes Mizuho. Its analysts there saying they're less excited about the near term and favoring a few other services like ServiceNow or Oracle over the next couple of quarters, though the firm still reiterates a price target of $480 on Microsoft. I want to bring in Daniel O'Regan, TMT Equity Trading MD at Mizuho Americas. You know, I want to go back to what I was talking to Mandeep Singh about, that comment on the call from CFO Amy Hood at Microsoft saying to monetize all the investment in data center is a 15-year timeline. How did you react to that?
Well, thanks for having me. I actually thought they did an excellent job of really threading the needle, especially on the CapEx side. I think what they did over and over again is really emphasize that this spending is going to be very, very meticulous. And what they did is it's predicated on demand. They constantly look for signals and spend accordingly. And again, a lot of these signals are near term, but a lot of them are very long term with north of 10 to 15 year parameters. I think they're spending for the future, and I think they're going to maximize the opportunity. Management has said over and over again that the risk of missing out on the AI trade greatly outweighs the risk of overspending. And I think they're excellent stewards of capital, obviously, and I would trust them with whatever CapEx plans they have.
Just really quick on Microsoft. You know, they seem a victim of you better not miss estimates at all in this environment. Is that fair?
Yeah, it was definitely fair. So Azure grew 30% year over year, which is absolutely tremendous for most companies. But considering that Microsoft is probably the second most crowded long in all of tech outside of NVIDIA, it was priced to perfection, even on this recent pullback. So again, it was at the low end of guidance. They put out 30 to 31. We heard that the buy side was closer to 31 to 32. Initially, the stock did sell off 8% as a knee-jerk reaction. But really, as the conference calls started to get underway, they really did an incredible job of explaining exactly where the weakness came from.
Yeah,
and they outlined two. Exactly. Europe, given the geopolitical risk there and the economy, that was a great spot to point out. And then two, more importantly, and this is when the stock really started to rebound, it's a capacity issue. This is not a demand problem. They simply don't have enough chips and infrastructure to satisfy this AI demand. So I think once they alleviated that, the stock really rebounded and it's almost back to flat. And then one other thing that when you go a little deeper made a lot of sense, this really stood out. AI demand actually helped grow Azure by 8% this quarter. Last quarter was 7%. So you're actually seeing an acceleration in AI demand that's really starting to provide real ROI, which I don't think is going to stop anytime soon.
Daniel O'Regan, TMT Equity Trading Managing Director at Mizuho Americas. Great command of the numbers, really appreciate it. I think we have to go back to NVIDIA. Look at the performance of NVIDIA shares in the moment, considering AMD and considering Microsoft. This is a stock up almost 12%. The catalyst is that Morgan Stanley has raised NVIDIA back to being its top pick after what it sees as a sell-off, giving an attractive point of entry, but that's a really big jump. It impacts markets more broadly. And I think we should just keep an eye on that throughout the day. This is Bloomberg Technology. It's time for Talking Tech, and first up, Samsung ramps up its 5th-gen high-bandwidth memory chip production. The electronics giant says it's set to start mass-producing its latest chips this year and expects it to contribute 60% of HBM total sales. Plus, Intel plans to eliminate thousands of jobs. That's according to sources who say the chip maker is set to announce the job cuts as early as next week as it looks to reduce costs and fund an ambitious turnaround. And sources also tell Bloomberg the Biden administration is planning to exempt chip-making equipment makers from Japan and the Netherlands from upcoming export restrictions to China, adding that the plans are fluid and may change. And I want to get to that story with Bloomberg's Ian King, who's standing by in San Francisco. You look at some of the names that are impacted, Ian, ASML and Tokyo Electron. This is a significant piece of Bloomberg reporting.
Yeah, I mean, there's a lot of reporting going on around this from us and from our rivals. it's an unclear situation right now. What we do know is there are more rules coming. There is going to be more pressure put on China via those rules. What has been in flux is how impactful that would be on some of the companies around the world, whether the Biden administration would go full in on trying to force the allies to follow suit, or whether, as we're seeing now from our reporting, they're going to get a pass on this, and perhaps those rules may not be quite as comprehensive and as effective as we had thought, or as Dutch or Japanese investors had perhaps feared.
Let's talk about the Intel story. The reporting is that, according to our sources, it's a significant reduction in headcount. Intel's a company that has 110,000 staff approximately around the world. The point of difference is its fab or foundry business, right? That's kind of accounts for the size relative to peers. What do we know about this, and why is it significant?
Okay, so there are a couple of things at work here. Obviously, Intel has had significant erosion in its revenue base, based on losing market share and the fact that its products just haven't been as strong. What it's trying to do to turn itself around is to spend a lot of money on new fabs, new technology, new R&D to get back in the game, but also to expand its business. Something doesn't quite fit there, right? You have a need for resources, and you have staff that are essentially in place to support a bigger business. So what we understand that's going on, and maybe announced as early as tomorrow when they report earnings, is that they're going to have to get rid of some of this staff to basically save money, to give them money to spend on these fight-back efforts.
Bloomberg's Ian King out of San Francisco. Thank you very much. Now, coming up on Bloomberg Technology, we're going to be joined by Kuo Zhang, president of Alibaba.com, to discuss how the company is leveraging the Paris Olympics. That's next. This is Bloomberg Technology. NBC Universal says ad revenue for the Paris Olympics has surpassed the record $1.25 billion sold for Tokyo's 2020 Games. A source at the company's, who's familiar with the company's ad spend told Bloomberg that strong ratings have translated into greater demand for the unsold inventory that NBC brought into the Games. Primetime viewership so far has averaged 33.8 million viewers, up 77% from Tokyo, likely due to favorable US time zones. And the Paris Olympics is not all about sports, it's also about business. Today, the Chinese tech giant Alibaba and its B2B platform, Alibaba.com, is announcing a partnership with the International Olympic Committee for an initiative aiming to help athletes start their own businesses, become entrepreneurs. The campaign's called Same Player, New Game. For more, let's bring in Kuo Zhang, president of Alibaba.com, who's in Paris. Good afternoon to you. Why make this arrangement with the IOC?
Actually, Alibaba Group is working partner with IOC as a global partner since 2017, 7 years ago. And first, we are committing to transform Olympic Games into digital area. And now we are working with IOC for the new Athlete 365 program. Since we meet with many of the athletes, we can feel that the successful entrepreneurs and athletes actually share the same or the common characteristics or the common qualities, from passion to resilience, self-discipline, push the boundary, and has a goal, set a very clear goal. And these are the kind of characteristics for the successful entrepreneur. And we actually see a lot of entrepreneurs on Alibaba.com. Hello?
Yeah, Mr. Zhang, we haven't much time, and I wanted to ask you about the other initiative, which is an AI-enhanced e-commerce search. So Alibaba.com is a B2B platform, merchants selling to other businesses. Why is an AI-powered or enhanced search important?
So today we launched a new product we think is bigger than Alibaba.com itself. So previously, the search is a kind of in a passive mode. You key in the keywords and then come up with the links with the different kind of pages. And now we use the AI technology. we can empower the search engine to be a proactive one. So the expertise of the human and the technology can work together, helping them to generate more ideas, more inspirational kind of products, and help them to filter the selection of product and suppliers. And in the end, we can use our solution technology, our digital supply chains, combined with the search engine together to fulfill their dream. So the athletes can use their kind of expertise in the ideas, in their innovations, and we can use the technology to help them to transform their ideas into reality.
Kuo Zhang, president of Alibaba.com, joining us from Paris. Thank you so much for being on Bloomberg Technology. I've got to go back to NVIDIA. This is what the state of play is in the session, up 12%. The catalyst probably is Morgan Stanley's making it its top chip or AI pick once again, but there's probably read-through from AMD's earnings, right? AMD's AI accelerator, the MI300, they upgraded the kind of sales forecast, but it's a market where NVIDIA dominates. So maybe there's upside to that. Maybe the market's saying, okay, if AMD is so positive about the continued spending on AI infrastructure, NVIDIA gets some feel through as well. There's a lot of other things going on in the market, right? We're keeping an eye on Meta, which reports later today after the US market close. It is up 2.3%, buoyant ahead of the earnings. Why? Hard to know. Maybe there's some read-through from Meta. One investor I was speaking to was making the point, Meta trades at around 21 times forward earnings. Microsoft, by comparison, 31 times forward earnings. They're different beasts. Maybe Meta's something you look at slightly differently in this environment to some of the other mega caps that are an AI play. It has the infrastructure spend, doesn't have a cloud business though. Okay, that does it for this edition of Bloomberg Technology. Don't forget, an incredible episode with a number of CEO interviews, recap on the podcast. You know where to find it, Apple, Spotify, iHeart, and everywhere in the Bloomiverse. From New York City this week, this is Bloomberg Technology.